This afternoon we're going to talk about phase 2 of the anatomy of a real estate transaction, and we're going to talk about the closing process. You've gone ahead and gotten your purchase and sale agreement and receipt for earnest money executed. We'll call that the earnest money agreement from here on out. And so I want to talk about seller financing. Most recently, with the tightening of credit and the additional regulations on the banking and lending industry, credit for real estate transactions has become more difficult. As a consequence, buyers and sellers have ended up in transactions where they've agreed that the seller will go ahead and finance the transaction and the buyer will actually be making payments directly to the seller rather than to a lender. Those are normally memorialized in either a land sale contract or a promissory note and a trust deed. The land sale contract and the promissory note and trust deed are documents that you need to consult with a real estate professional to prepare. Escrow officers will sometimes offer to prepare a promissory note and a trust deed. I caution you not to have that happen because they frequently just use a form and plug numbers into it. And each of these transactions is unique because each transaction, a real estate transaction, is unique and individualized. So consult a real estate professional and a real estate attorney to go ahead and prepare those documents. The thing I want to stress in all of this, however, is that you as the seller are loaning the buyer the money to purchase your property. Treat yourself just as you were the bank. Require that the buyer provide you with financing documents just as the bank would, to include copies of bank statements, copies of tax returns, a financial statement, and you should get a credit report because you want to make sure that your buyer is creditworthy and isn't likely to default on the payments to you. The next thing you're going to be looking for is a preliminary title report, which will be issued by the title company. That will show you and the buyer what the condition of the title is. It'll show, for instance, whether there are any judgments, other liens that have been registered against the property. And you need to look those over carefully because sometimes judgments and liens pop up because of names similar to yours and the title company can't tell the difference of whether it's you or someone else. It'll also show easements or other liens against the property. Check it for accuracy. The other thing you're going to be looking at are contingencies that showed up in the earnest money agreement. Those normally fall into two broad categories. The first is financing, which basically means that the buyer is saying that I'm purchasing this property, but it's subject to me being able to get a loan in order to purchase it, and if I can't, then the transaction is going to fail. The second one usually are inspection contingencies, and those result in an inspection being done on the property, and oftentimes if there are things that the inspector finds needs to be fixed, you're going to be seeing a repair addendum from the buyer that's going to ask that you fix a number of things. The things that you normally see in those repair addendums fall into two categories, what I like to call the nice to have category, and the other is the health and safety category. Nice to have is the kind of things where let's say the sliding screen door and the sliding back door is stuck or sticking and they want you to fix that, or there's a patch in the ceiling where the paint didn't actually match and they're going to want you to paint the entire ceiling, things like that. Health and safety items are things like the strapping on the water heater isn't correct, or there's a need for a GFI plug in the electrical system, or the plumbing isn't up to code, those kinds of things. Remember that all of these things are negotiable between the buyer and the seller. You're not required to do any of those. However, if you fail to do them, either the buyer may not be able to qualify for the loan, or the buyer may say, I'm out of here. So negotiate those carefully. If you're the seller, you may want to consider satisfying those requirements either by giving a credit to the purchase price or by conducting the repairs yourself. I usually recommend for sellers that if the repair is something where there's a known risk, you don't have any hidden damage problems, then go ahead and do those yourself, because you can usually do them more cheaply than what it's going to be demanded by the buyer. But if there are unknown risks, then you may want to just put an amount as a credit against the purchase price and let the buyer deal with it. In any event, these are forms and you need to read them carefully. The last step in this is, of course, the closing with escrow. Escrow officers are there to prepare the closing documents. They'll give you a preliminary closing statement which shows the credits and debits on the transaction. Read those over carefully, make sure that you understand them and that you agree with them. Escrow officers are real good generally at what they do, and they're very accurate, but sometimes they don't have the latest information and they can make mistakes just like some of us all do. The last thing I want to say is remember that if you don't understand something, and I want you to read everything carefully, then consult your real estate professional or a good real estate attorney. Good luck in your transaction.